Welcome back. Andy Kim. This is International Financial Management, and today we're going to talk about Chapter 20, Trade Finance. All right. Um, okay. So why trade finance? You may wonder, right? The thing is, the typical international financial management classes in business schools do not cover trade finance that much, right? Why is that the case? I don't know precisely, but perhaps I can guess it, right? Maybe because of vanity issue, right? The trade finance stuff seems like very down to earth or mundane and too much detailed work about, process oriented. And there's no fancy stuff like anything involving hedge funds or private equity, or compared to this, mergers and acquisitions or derivatives trading. That sounds more like, more fancy over there. And then a lot more money is involved over there. A lot more genius people go to, the M&A job kind of fantasy, right? Whereas trade finance, there's not much room for you to make money. Maybe, perhaps that's why. Okay. Also, professors may be biased in teaching this, right? International trade major in economics is there for you. So why don't you go to economics department and study trade finance over there? That may be one of the approaches. I don't know. Perhaps maybe people are overwhelmed by this complicated procedure of trade finance. You're going to see that diagram. Okay. And then um, perhaps lastly, you would say you can learn this kind of things on the job once you get there. Um, but here's my reason why we need to cover trade finance, right? Trade finance is the origin of international finance, right? So it's like Genesis of the Bible. If you skip it, um, what is it for, right? Uh, Deutsche Bank, for example, was established to address the need for trade finance of German people in 1870, specifically for this reason. If you want to work for Deutsche Bank, don't forget trade finance, man. That is your starting point, okay? Um, uh, and then it will not go away, right? As long as there are different countries and different geographic separation, and then there's a trust issue between two different parties involving two different countries, you need bankers who are working in those two countries and then connecting you each other, and it will not go away. And you see this deglobalization process, right? um, that will also create another problem of, new challenge to this trade finance. And then recently the blockchain has been in hot in fashion, right? And then there are some efforts to make this trade finance process blockchainized. Okay, I'm not going to cover the blockchain part of trade finance today, but just keep it in mind. This kind of things will be hard issue and will be something that you have to tackle in the future. And then for your career, realistically, for GBA students or Korean students and international students as well, right? You need to have some understanding of this kind of things so that you will be able to tackle some questions in job interviews. Um, Firstly, Korean students' dream job is Kexim Bank. What is that? 수출입은행, right? 금융공기업, or like public companies or government sector financial firms, right? Export and import bank. We're going to talk about this today. That's your dream job. Don't you want to know what that kind of job is about, right? What do they do? Um, this is involving precisely, the Kexim is precisely focused on trade finance, right? So many smart people go there unprepared, I guess, if they don't study this trade finance stuff. So I think you want to familiarize yourself with these jargons that we talk about over here to be able to go through that process of going into the Kexim Bank. By the way, Kexim Bank, this is not my best recommendation for you, okay? The thing is, so many people say this is number one priority for, their job market, right? Dream job for the students who is good at test taking. So they happen to select those smartest guys among the population. Now, what is the problem over there? Well, the job that you do in Kexim Bank is very dull. Not much room for growth over there. In terms of your career, in terms of your human capital, not much flexibility that you can do. So you will be capped over there, like not much growth. There is feeling so much limited over there. Whereas your brain power or maybe your energy is very, 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 very high. I mean, to the degree of winning the competition with the nation's toughest entrance exam, okay? You have to be genius or quasi-genius. IQ 150 or 45 or something like that. And you are capped and you will be frustrated, okay? Some of them may say, oh yeah, I will, work relatively okay in my Kexim Bank and then I will realize myself in my hobbies or something else. Come on. That's not what you're supposed to do, right? So I don't suggest my students to go there, but if you want to take those exams and then familiarize yourself, you need to trade finance understanding, at least, okay? Don't go there unprepared, that's what I'm saying. Now, all Korean branches of foreign banks have trade finance functions, okay? Bank of America, Citibank, JP Morgan, Chase, you name it, BNP Paribas or whatever, Kalleong Bank, right? All those foreign banks that you want to work for, they basically have trade finance functions over there. I mean, that's precisely why they set up those Seoul offices, right? Or Korea branch. Otherwise, why would they be here, right? So to go there, right? I mean, and also more of a job opportunities may be available for trade finance functions than for investment banking M&A positions or those derivatives transaction trading desk kind of stuff, right? This trade finance will be your basic building block over there. Once you go there, it's easy to move around, okay? But the toughest part is just to get there, okay? Just to get there. And students just don't realize, okay? All they know about is the fanciest and sexiest stuff, like, oh, M&A. Other than M&A, I'm not gonna even look at whatever fancy the whatever foreign bank's name, okay? Only the super top of the top, I'm going to apply for those jobs. Other than those top jobs, get away from me. No, you're arrogant, okay? First, go into that trade finance function and then move to a different division later on, okay? By that, you can familiarize yourself with these environment of foreign banks and get to know the people and then say hi, and then over the years, maybe a couple of years later, you can move to a different division, okay? Because once you get to know each other over there, they will have some trust in you, so that, oh, okay, he's working hard or she's working hard over there. Why don't I just select those guys over there, that guy, to my M&A division, okay? Let's work it. We are family kind of things, right? So that is one important chance that you have to think about. And then credit analyst that I worked for in Bank of America, we also study the credit quality of the exporters and importers, right? You're going to see Samsung Electronics or Hyundai Motors and these kind of guys importing and exporting stuff, right? The credit analyst job, right, is assessing the strength of the guys who is exporting or importing. Why? Because those banks involved in helping those trades, right? They have to have a good understanding of this exporter and importer. So one of the important job for credit analyst is to assess this credit strength of these importers and exporters, right? And then credit analysis job, okay? That is, of course, not as much fancy as M&A analyst or stock brokers or traders over there, right? It's not as fancy, but it is a solid starting base, right? You can go to anywhere you like, right? M&A valuation, whatever, IPO valuation later on, or debt capital market. You can move around very flexibly, the credit analysis job, right? So that is deeply involved with this trade finance as well. So you have one more reason to go there. And then international divisions of Korean banks have trade finance functions. Of course, Shinhan Bank, Uri Bank, all these kind of banks, Hana Bank, right? They have trade finance functions, so it will make you more flexible. Talking about that, again, Kexim Bank kind of environment, right? Bureaucratic. Korean banks, right? Typically, Korean banks, they are much more bureaucratic, so that you may feel very limited in terms of your capacity, and then the human capital wise, how much can you grow, right? Very limited. So I don't suggest you, but so many of you are interested, so that's why I have to tell you. Among Korean banks, which bank is the best? Shinhan Bank by far, Hana Bank, and then I would say, right? They are very fast, and then that kind of fast culture, and then people take responsibility and then move on, go get it, kind of spirit is there in Shinhan Bank and Hana Bank kind of guys, right? So if you want to go those kind of banks, right? Other banks, good luck. Okay, so, and then international business divisions of multinational corporations, right, have trade finance functions. You go to Samsung Electronics, you go to Naver, you go to whatever small companies and big companies, and they, Korea, remember, Korea is export-oriented country. So why is that the case? Because domestic market is very, very small, right? You can't do any business new, right? You have to export your stuff to China, America, Europe, whatever, growing market, okay? Lack of population inside Korea. So that's why international corporations, right? Not just big companies in Korea, but small companies as well. They are driven to, they have to export some stuff, right? To foreign countries. There, they need you. Okay, global business majors, right? Small companies and medium-sized companies go there and work. And for that purpose, you need trade finance understanding. And then fintech and venture, I told you, this kind of trade finance function is blockchainized, so it will help you. All right, so chapter outline, I'm gonna talk about the typical foreign exchange transactions, and then discuss a little bit about forfeiting. I mean, basically, it's gonna be like talking about these jargons and then familiarizing yourself with this kind of concepts over there. Okay. And then Exim Bank, we want to talk about it because that's government assistance related to exporting. And Countertrade kind of things will be talked about. Over the years, or actually centuries, right? An elaborate process has evolved for handling exports and imports. And think about global trades, right? Ever since the spice trade, like 500 and 600 years ago, right? It's all about the trust issue. Somebody had to export some material from one side of the globe to the other side of the globe, okay? And then, for example, over here right now, okay? Let's say you are an exporter from South Korea over here, and then you are exporting your samdasu, right? This water. to Montevideo, Uruguay, which is exactly the opposite side of the globe, starting from South Korea. If you just drill it, right, drill the whole Earth, right, down to bottom, from starting from South Korea, you will end up with Montevideo over there, Uruguay. Okay. So, the issue is for both parties, the exporters and importers, right? They have their own respective concern. Exporters, well, they will be like, is this guy in the Montevideo a real guy? Okay, and then is it trustworthy, or is there some fraud going on so that I will be afraid if I send my materials in vain and then get nothing out of there. Okay, I guess you must have received some emails from third world countries that says, "Ooh, dear beloved friend," all of a sudden, your beloved one, and then I am a widow of a billionaire in whatever country, so I have a certain $1 billion in my pocket. So why don't we do our business together so that you earn a part of my money? Okay, that kind of fraud can happen. So the exporters don't want to send their stuff to somebody they don't really know, right? On the other side over here, right? The importers have a concern too. Is this exporter a trustworthy guy? All right? Am I sending my money to out of nowhere, right? A gangster or kind of fraudulent guy, right? And a Ponzi scheme kind of guys, right? You don't want to do that kind of stupid mistake. There's a trust issue going on, right? They've never met each other. They are on the other side of the globe. Even if they meet each other, still there is a concern, right? So in this kind of setting, okay, the bankers get in there. Bankers from this side and that side, respective banks will be there, and then they will be essentially guaranteeing, right? Oh, you importers and exporters, don't worry, right? We check the credit quality of these guys, and then they are trustworthy, so why don't you do the transaction? That's basically what's going on in trade finance, all right? And on the way, the bankers issue some kind of guarantee letter, which is called letter of credit, and then also once they also issue something called the banker's acceptance, because the money, right, the trade, the stuff that goes from here to there, it may take a long time, like 60 days or something, and then the guys need money, okay? So before 60 days passed or something, before the actual payment happens, these guys in need of cash, right, take this banker's acceptance and then get it discount in the money market, okay, and then finance their short-term financing needs, right? So that's what trade finance is all about, right? But the diagram-wise, it is very complicated, so don't get frustrated over here. Okay, I have to shrink down. Let's say over here, right? Just for the purpose of fun, I brought some real company names over here, right? Here we have one South Korean company exporting their mask pack. These days, South Korea's best export is perhaps semiconductor, and then comes mask pack. The Korean beauty, K-beauty kind of industry is hot in fashion, right? Who doesn't know K-pop? Who doesn't watch Korean drama kind of stuff? And moreover, so many people come here to get plastic surgery. Oh my God. And then if not plastic surgery, they go for Korean mask packs or some kind of cosmetic stuff, right? One of the things I want to point out over here is something called France, right? Actually, that's my friend's company, right? They're producing this kind of mask pack where you release some kind of electric waves, small minimal waves, so that you have the more functioning of this, right? Anyway, I don't get financial support for talking about this guy, but the thing I want to tell you is that they export a lot of stuff to Europe and America and China as well. So they are the exporter, okay, over here. And then in America, right, you have Nordstrom, okay, they have to sell it in the department store, right? Perhaps they try to aim for upscale department rather than a cheap market, right? Okay, discount stores, right? So that's exporter and importer that you see. Exporter, importer, yeah. It's a mirror opposite image, right? From my side, okay. Now, exporters and importers, we have it, but they cannot trust each other. Who are you, friends? They would say. So the exporters will need bankers over there. So in Korea, they try to find some bank that can help them, right? Let's say there is Shinhan Bank over there. And then Nordstrom, of course, they need a bank that can work as a middleman, right? So there comes Bank of America. Okay, importers bank, exporters banks are set up. And what you see in the middle is the money market investors. Money market means like overnight or very short-term finance market. Typically, this kind of bankers acceptance or those borrowings, IOUs within like less than 60 days horizon. Okay, those kind of things are traded at discount, and then certificate of deposit kind of stuff, or this kind of commercial papers are traded in money market. And if you go to investment banks or any kind of banks, there are some trading desks that specialize on this money market, and we call it money market fund, right? There are some funds trading on this kind of money market and might make money out of it. So this is really short-term capital market. If it is a longer term than this, like 1 year, or the instrument is like 1 year or many years, we call it capital market, right? So money market investors are there for you. Now let's start it. So importers, right? They have to talk to the exporters, right? And then finally they said, oh, we like that product. I want to buy 1,000 of this or 1,000,000 of this, maybe, I don't know. And then they place order, and then immediately they go to the importer's bank. Okay, they apply for letter of credit. Okay, and then the letter of credit, which is like a guarantee. Okay, guaranteeing what? Well, guaranteeing importers, right? Guaranteeing that this guy is trustworthy, right? So don't worry, exporter, Mr. Exporter, you are not being deceived. Send your money, we guarantee you. Okay, we guarantee that this importer is a trustworthy guy. So if they don't pay you, we're gonna pay you. Don't worry. That kind of letter of credit is issued from the importer's bank, and then it is sent to the exporter's bank, and then they have to show this letter of credit to exporter, and then say, okay, Bank of America guarantees that Nordstrom is a good guy, and then ship the goods, of course, right? And then shipping does not happen just freely. Okay, as you ship those boxes, okay, on the container, and then they will issue some bill of lading kind of documents, right? So because you need some evidence that you really sent those products to the other side of the globe, right? Now, so shipping documents and the time draft are sent from the exporter and then to the exporter's bank, and then this exporter's bank toss this to importer's bank. Shipping documents and time draft accepted, okay, and then the importer's bank may pay, okay, payment discounted value of banker's acceptance. Now the banker's acceptance is issued, okay, BA, they call it BA, banker's acceptance, not Bank of America, but BA, okay. Banker's acceptance is like, yeah, the money is coming, so as a banker we accept this, and then you can trade this acceptance letter at discount later. Payment discounted value of bank of acceptance goes to exporter, and then finally, not finally, the importer, right? They say what? Signed promissory note for face value of banker's acceptance is sent from importer to importer's bank. So it's like IOU bank, right? IOU, right? The importer Nordstrom will send the document, say IOU, okay? You paid for me, so I owe you this amount, okay? And then shipping documents are sent then to the importers, and then banker's acceptance goes to the money market, okay, money market, and then the present value or discounted value of this is sent back to the importer's bank, and then the importers pay the face value of banker's acceptance, right? And then the banker's acceptance is presented at maturity to the money market investors, and then the face value of banker's acceptance, the money is paid to the money market investor finally. Okay, quite complicated procedure, quite a complicated procedure. So, but don't get overwhelmed over here. The key idea is a guarantee. Okay, key idea is guarantee, because importers and exporters, they cannot trust each other. Bankers get in there, okay, respectively, and then these bankers send the letters of credit, which is a guarantee. Don't worry, the importer is trustworthy guy, so you exporter, yeah, send your stuff. Okay, fine. And then the banker's acceptance is also issued over there. Okay, the importer will pay me later, but with that guarantee or IOU kind of promise, right? We issue a banker's acceptance, and it's a piece of paper, and you can trade it in the money market, and then the discounted value of this, it will be given to you. This kind of structure is there. Letter of credit, this is a guarantee from the importer's bank that it will act on behalf of the importer and pay the exporter for the merchandise if all relevant documents are specified, okay, in the letter of credit are presented according to the terms of the letter of credit. In essence, the importer's bank is substituting its creditworthiness for that of the importer. I guarantee you, right? By the way, personally, never guarantee anybody, okay? Don't ask me to guarantee you for financial purpose or anything, right? Person to person guarantee, no way. That's the easiest way to screw up yourself, your life, okay? Don't get into any guarantee situation. But banks, they can guarantee somebody. This is an institution that government supports, right? So you have that facility, and then that's your job as a banker, right? As a banker's guarantee, bank guarantee, right? But personal level wise, no way. Okay, don't ask, don't answer. Yeah, letter of credit. I show you some sample documents, application, UBS, Swiss Bank, and then Credit Suisse again. Letter of guarantee, all these kind of things. You can just look at it. And time draft is also involved. This is a written order instructing the importer or his agent, the importer's bank, to pay the amount specified on its face on a certain date. Okay, and then bill of lading, 선하증권 in Korean terminology, I think. And this is a document issued by the common carrier specifying that it has received the goods for shipment. It can serve as a title for the goods, ownership, right? You have the title of this good. From now on, you own it. Yes, it's a bill of lading. Maersk, Sealand. This is Danish company, I think, right? Very well. I mean, you've seen these ships before in televisions, I guess. So this kind of things is issued. Banker's acceptance is also issued. The exporter's bank presents the shipping documents and the time draft to the importing bank and importer's bank. After taking the title for the goods via the bill of lading, the importer's bank accepts the time draft. At this point, the banker's acceptance is created, okay? And it is negotiable money market instrument, okay? Negotiable. You can, depending on the negotiation of, it can be discounted to a certain degree, okay? And then traded, okay? A secondary market exists for bankers' acceptances. Secondary market, what do you mean by that? Well, primary market is issuing market, like IPO, and all the rest of it is secondary market. The third party trades, okay? Third party doesn't know anything about before, right? A secondary market is that kind of traded market for this security. Bankers' acceptance, how does it look like? Yeah, it looks like this. All right, and then bankers' acceptances, well, it can be held to maturity by the exporter, right? Well, from Korea to, what is it, Montevideo, maybe 60 days it takes to go over there, right? Would you wait 60 days? The thing is, money never sleeps, right? So you may want some immediate cash. So you can, how do you say, go to money market and then gang or get a discounted cash of this banker's acceptance, right? The exporter can also sell them in a money market. Since the risks are similar, the banker's acceptance trade at rates comparable to the certificate of deposits, CD rate, okay, discounted. Okay, and then forfeiting. Forfeiting is a type of medium-term financing used to finance the sale of capital goods. Capital goods means like equipment, factory machines, right? 반도체 장비, like Samsung, for Samsung Electronics, capital goods would be like the machinery equipment that produces the chips, right? The equipment thing, right? Guess you can guess that it must take a long time to produce this kind of equipment, and then orders, and then actually accept getting this equipment will take longer time than simply buying and selling this kind of 삼다수 kind of goods, right? Consumption goods. Now, it involves the sale of promissory notes signed by the importer in favor of the exporter. The forfeit, okay, usually a bank buys the notes at a discount from face value from the exporter. The exporter gets paid and does not have to carry the financing. All right, forfeiting, like I heard that it started from France, so I don't know how to pronounce it in French, but we have a French student. Help me, right? Is it forfeiting? I don't know. I hope that's right. Anyway, now, government assistance in exporting, right? Yeah, for political reasons, right? It has to do with the mercantilism. The government, they try to boost exports, right? Who wants to maximize import and minimize exports? No, okay? No president of any countries would want that, right? No kings. They want to promote their exports somehow. And then trade finance, they need to facilitate this. But the thing is, there may be some situations where it is very risky to export. Maybe the material is too big to sell, or right? Or maybe the buyers over there, okay, is the third world country that you never met before. Let's go. For that purpose, you need a KEXIM or an EXIM bank, Export-Import Bank, that is a government organization. For political reasons, most developed countries offer competitive assistance to domestic exporters. This assistance often takes the form of subsidized credit that can be extended to exporters, and also credit insurance programs that guarantee financing extended by private financial institutions are common. So it's kind of guaranteeing that for the exporters. Rest assured, you exporters, right? We guarantee you sell it to the other side of the globe, right? Export it. We guarantee you. So Korea has Exim Bank, Korea Exim, right? Export and import bank. Export comes first, right? Yeah, it's not Imex Bank, right? Exim Bank, right? And US has their own Exim Bank, right? And then Japan has Jexim Bank, and Thailand has, I guess, Texim Bank, Thailand Exim, right? China has also their own Exim Bank, which means like maybe Chexim Bank, or I should be careful. Euro, right? They also have their own Exim Bank, right? Okay. In the United States, Exim Bank, right? In 1934, the Exim Bank of the U.S. was founded as an independent government agency to facilitate and finance U.S. export trade. Exim Bank's purpose is to provide financing in situations where private financial institutions are unable or unwilling to guarantee because the loan maturity is too long, okay, time risk, right? And then the amount of the loan is too large, too big to handle. Oh my God, the bank is so small, and then the guarantee amount is very big. No way. Government gets in there. Loan risk is too great. Yeah, essentially high risk, right? And then importing from a firm has difficulty in obtaining hard currency. Importing firm, right? Has difficulty in obtaining hard currency. Maybe the company is very small, right? Small and medium-sized companies. That may be why. Loan risk is too high. Maybe the importing country is North Korean, kind of. North Korea. Kim Jong-un. Yeah. By the way, it is forbidden to trade with North Korea these days. So don't think about it. But there are many countries that is kind of a risky like that. Okay, all of a sudden. The countertrade, yeah. Countertrade is an umbrella term used to describe many different types of transactions in which the seller provides a buyer with goods or services and promises in return to purchase goods or services from the buyer. It's like a countertrade may or may not involve the use of currency, as in barter, right? Barter, 물물교환 kind of things. Sometimes you import a lot of stuff, and then if your country is somewhere in the Mediterranean Sea, right? There are some cases when those countries near Mediterranean could not meet the how do you say, could not send their cash in time, so that they had to send their wines, right, in response to this importing stuff. Countertrade, barter. Barter is a direct exchange for goods between trader, and requires a double coincidence of wants. The clearinghouse arrangement is a form of barter in which the traders agree to buy a certain amount of goods from each other. The wine, right? At what rate? Okay, at what price? Okay, you need some clearinghouse for that. They set up accounts with each other that are debited and credited as needed. At the maturity of the arrangements, the parties settle up in cash or merchandise. And then the firms of countertrade, right? Forms of countertrade, switch trades and buyback transactions, all these kind of things are there for you. A switch trade is a purchase by a third party of one country's clearing agreement balance or hard currency. Buyback transaction involves a technology transfer via a sale of manufacturing plant. Some of your, my students, they say their parents work for Daewoo Corporation or Samsung-Mulsan, kind of big corporations. Samsung-Mulsan, what is the difference between Samsung-Mulsan versus Samsung Electronics, or Daewoo, 주식회사 Daewoo versus Daewoo Motors, right? This kind of corporations, right? one of their jobs was to export and import a lot of different goods. And one of the major business they did, and 주태우, right, was exporting plants, plant 수출, right? You build the factory over there, transferring technology, okay? And in return, you get some stuff from there, buy back. I mean, you build the factory over there with the promise that you're going to buy back some products that they produce with that new factory, okay? The seller of the plant agreed to buy back some of the output of the plant once it is constructed. Why do you do that? Well, for these factories, once it is built, you need some cash to justify that investment, right? So part of it, you are, as a kickback kind of things, you are buying it back from that newly built factories, okay? Counterpurchase trade agreement is similar to the buyback transaction, but it differs. That differs in that the output that the seller of the plant agrees to buy is unrelated to the plant. And then offset transactions can be viewed as a counter-purchase trade agreement involving aerospace and defense industry. You can read off those things about offsetting transactions in Philippines. And then disadvantage of counter trade is that it is rather inefficient. Some claim that such transactions tamper with the fundamental operations of free markets and therefore resources will be used inefficiently. There's a lot of room for expropriation kind of things. And transactions that do not make use of money represents a huge step backwards in economic development. Counter trade, okay? There are some advantages, right, as well. Counter trade conserves cash and hard currency, the improvement of trade imbalances, and then there's maintenance of export prices, and it enhances economic development of the third world countries. So nowadays, the Korean companies are exporting their plants to third world countries, and one of their justification is we are helping their economic development with our plant productions exported, right? How would it be affected by this COVID-19 or a deglobalization process, waves, right? It's going to be an interesting thing to watch, right? We don't know. And then market expansion and increased profitability and less costly sourcing of supply, reductions of supply goods, surplus goods from inventory, and the development of marketing expertise. All these kind of things are said to be the advantages of counter trade. There are advantages and disadvantages associated with this counter trade. It can benefit both parties, and in some circumstances it is the only trade possible. Whether or not counter trade transactions are good or bad for the global economy, it appears certain that they will increase in the near future as world trade increases, but that was when the textbook was written. After COVID-19, let's see. Summaries of this is you can read, and then self-explanatory. And then I think from now, okay, I need to tell you about the final of this class, right? Now, yeah. So until now, right, we talked about the trade finance. If you're Korean students, maybe you can refer to this kind of books, 수출입 및 환 리스크 관리 kind of books. In 교보문고, like 한국금융연수원, they publish this kind of things a lot. So you can read over there, right, depending on your needs, right? Also, for exams, right? Yeah, I told you about how things will work over there, right? The iCampus based exam will be there, and I will assign some homework problems to you based on this textbook over here, right? This time it's not really a homework because I'm going to post the solution together with it. I'm not going to collect it or anything. So go ahead and solve some problems and practice yourself. The coverage of the material for final exam, everything we did ever since the start of the semester, right? So if we go back in the chapters, what did we learn? Okay, the table of contents. Chapter 1, 2, 3, yes, we did it. Globalization and multinational firms, international monetary systems and balance of payments, all these kind of things, we talked about it, right? The globalization waves, all these kind of things, right? We're going to talk about it in the exams. And then chapter, what is that? 5, 6, and 7, the market for foreign exchange and international parity relations and forecasting foreign exchange rates and futures and options and foreign exchange. Yeah, you're going to cover that part. By the way, chapter 4, corporate governance around the world, no, not really. Okay, we skipped it. Okay, we wish to have covered it if we cover international mergers and acquisitions, but we did not have a chance to cover that part. Okay, so we're gonna skip corporate governance. After all, corporate governance, by the way, is all about what? How to get my money back, right? I want my precious money back. As an investor, you are the CEO, I am the investor, I want my precious money back. And this kind of voicing, okay, of the investors is very strong in Western culture and more advanced and developed countries, whereas this kind of voicing was very minimal in Asian countries or less developed countries. So as you do cross-border M&As, this kind of voicing out will be a big issue. And then advancing your corporate governance happens with this international M&A. That's a typical one-line story over there. But having experienced COVID-19 and then how this United States and Europe has been suffering from this all kinds of troubles of social unrest of I'm not going to wear mask or anything, and then a lot of people get infected, whereas Korea, the situation has been settled peacefully these days up until now. Okay, not going into the future yet, we don't know, but having watched this one going forward, right? And you saw China, right? And some of you will say, I also myself, oh, that's centrally, controlled government, and then you don't have liberty over there, right? But in Korea, we are a completely democratic country, and we still, okay, had that kind of process because the social contract is there, implicit social contract. We say, okay, to a reasonable degree, we understand that the central government, can trace where I went, right? To nightclubs or whatever, it's okay. Okay, I accept that part. There was an implicit social contract going on. Okay, having experienced this kind of things, right? Compared to the Western world, the governance issues, or would the people accept this kind of ideas about, oh, we always learn from Western Europe or America. Korea is always like a emerging market, and then we are inferior. We have to learn from you guys. You are superior. Wait, okay. So there will be a moment we are experiencing this kind of wait a minute kind of things, right? And then it is going to be interesting in the future what happens as the international investors try to take over Korean companies and restructure governance structure. Still the governance, okay, give my money back, I want my money back, that kind of idea is valid, that's good. But the people, the general investors in Korea, how would they be receptive to this, right? Is a question. Now, by the way, that kind of things is not going to be covered in the exam, okay? Anyway, Chapter 11, yes, 12, right? We skipped 8, 9, 10, right? Transaction exposures and all these kind of things. In the interest of time, we had to skip it. But it's more about accounting related issues. So I'm not going to cover those things. Chapter 11, 12, 13, 14, right? International banking and money market and bond market, we covered it. Chapter 13, we did not cover it. Okay, equity market, yeah, it's very self-explanatory, but I'm not going to cover that part in the exam. Excuse me. And then chapter 14, interest rate swap. We did it, and I'm going to cover that one. Yes. So 14, get ready, and 12, we did it. Get ready. And chapter 20, okay, trade finance stuff will be the last one. 16, 17, 18, 19, and 21 we did not cover, so skip it. Yeah. Oh, Andy, why didn't you cover the whole textbook over here? Well, this is more like a cookbook, okay? Cookbook. I just covered, okay, what is important to my eyes, right? What is important, and then what is relevant, right? And then those stuff that I did not cover, okay, you can always go back, okay, and then read it, and then practice yourself later in your career, in your job, okay. Okay, that's that. This semester, well, when it comes to international financial management, right? This semester, wow, what a turbulent global world that we have been going through, right? COVID-19, we talked about it, okay, already. I hope your home countries will be, overcoming this COVID-19 well, okay? Hopefully, peacefully, please. Yeah, I pray for you guys, right? Pray for Korea as well, right? And then would this COVID-19 or COVID whatever, in the future will affect the globalization process or globalization wave? Wow, that's a big challenge, right? And then you see the movement depicted by Donald Trump, right? And Xi Jinping, and then the trade war happening between these two big guys, right? How would that affect this international financial arena, right? Is a big question. It's going to be very exciting to live in this world. Very challenging, actually. Challenging, I hope, and then very risky. And then hopefully this kind of challenging and risky environment will give you a lot of rewards. Risk and reward. High risk, high return. So it's going to be worth investigating and keep your eyes on it. And then let's hope for the best. And then I hope you learned a lot throughout this semester. I enjoyed teaching with you guys. I wish to see you and meet you face to face, right? That's the only drawback. I told you this is my first time to teach international financial management. But as it turns out, I like it. Okay. Why don't I teach it again next semester and then forever? Right? So I hope you enjoyed my lecture, and then let's do the challenge, and then stay in touch with me, and whenever you have questions, talk to me, email me, right, at the following email address that you see below. All right, and then good luck, and then bye bye.